Hello, and welcome to another episode of The Trade Stylist, the place where we try and craft your trade. This is the week of 17th of March 2024, and of course, we start with disclaimers that number one, all views are personal, and then that there is substantial risk in all investments related to trading, and you can lose more than your invested amount. That being said, there's always opportunities as well, and that's what I'm here to explore. So my name is TheTradeStylist, better known as DJ. I'm here to help you craft your trade, and you can find me at the TradeStylist, the YouTube, Twitter, now called X, and also on Instagram. So once again, may the trading gods be with us always, and we'll look at how the markets have performed in the last week in our market update. Well, simply speaking, the soft complex is still doing very well, and this is primarily driven by cocoa and in a little bit more on orange juice. But if you would see Robusta and cotton, they've actually lost a little bit of power, and sugar has also, however, gained over the last month. And one of the trade setups that we had gets cancelled out almost basis this. That being said, there is something very interesting playing out in the coffee space, which is where the Robusta prices are sort of now going towards a situation where it might actually become at a premium to Arabic at some point of time. And we'll talk about this in the next episode, so please do look out. But yeah, this is something that probably might be a transitional shift. Looking at the grains market, on the other hand, we'd see that the grains market still is almost bearish. Soybeans, however, have taken a little bit of strength going into this week, touching back on 1200 cents, 1200, and soybean oil at 49.58, which is a significant rise over where it was last week. But all of the other complexes, which is corn, wheat, and soybean meal, are significantly down. Looking at the YTD, no surprises there. Cocoa, of course, beating everything, and then you can see orange juice also pulling up the rest. Robusta, as we can also see, is higher by almost 60%. On the other hand, the grains complex, if you would see, soybean oil and soybean are roughly down just by around 20%. Soybean oil has pulled back to be just around 13% down. And that shows you that the market sort of is regaining strength, especially soybean oil. And if you had looked at some of the earliest episodes, a few episodes back, I had remarked that how the fact that there were no deliveries happening for soybean oil potentially opens up this chance. So we'll explore this definitely in future. And now, instead of putting trade graph at the end, we're putting it right at the front, so we see how the trades have positioned. And as we can easily see that in this case, the market has been moving up. It bounced roughly, and however, it seems to be facing a resistance at our stop loss levels, and we do think that probably it fails here, and if it does, then our trade setup still stays. So I'm not changing my stop losses. Worst case, we'll get out with a small loss, but if you had put in a small take profit order, at this point of time you would have exited the trade. So depending upon how you've positioned this trade, for me, I'm still staying, and my trade setup has not been negated as per my numbers. On the other hand, we look at corn, and corn again seems to be sort of dipping, and I had mentioned that we would like to go long somewhere around 430 levels. Probably we can revise that a bit downwards if it is not yet executed, and let's see if the market actually bounces. It closed positive at the end, however on a week on week basis it actually fell. So we still need to see if the market is as bullish. In terms of RSI, in terms of some other technical indicators, seems that on a longer term basis it's still bearish. On a short term basis, it's not negated in bullish reversal. This is where we are, and let's see why this market has been doing how it has behaved, where we call it the trade speak, and we explore the what, the why, and the when. And that primarily today we talk about how and why the soybean market has sort of started shifting. And this is primarily a function of two different countries, and this is Argentina and Brazil. And they're looking at how big or small the crop typically is. And if you saw what the USDA report came out last week, you would see typically that the crop size that they're looking at has been slightly reduced. But that being said, the overall market still expects a pretty decent crop. In a normal scenario, we should see soybean dipping more as we go into harvest, probably on the 11 cents level, which is where it was going towards. But then there is strength in the soybean oil market again, which would drive more consumption of soybeans. And because of the hit that probably farmers have taken, soybean acres against corn or anything else probably would have increased, and that's primarily the reason that we're getting the lower side of the prices. The other thing that we need to look at, and this is what we're going to explore in the next episode, is the relationship between Arabica and Robusta. And I think that's something that is potentially a major transition point for the industry. And Arabica has always been a premium market. Arabica has always been treated as the fine flavor, the gourmet market of coffee. And yet, because today the demand of Robusta has increased so much, because of the price changes, because of taste preference changes, and because of the way people are able to treat coffee better than they'll probably be able to treat it in the past years. And I think that's sort of changing inside the same commodity. So both of these things to be watched about. Moving on, we look at Trader Peak, which is basically the points of interest. And we start with the news headlines. First of all, oil prices are pretty strong over the week. An LPG tanker has been attacked in the Red Sea by Houthis, so that problem still continues, and this is one of the few, but it has an impact on gas. The USA, however, appeals the court temporarily to pause SEC climate rules. This is more related to disclosures, and those disclosures also are something that have a cost element and there's a control element, which is what the consumer court is trying to prevent in this case. But of course, we also know that there are people behind this who would not want to starve. Moving on, EU is thinking towards reducing greenhouse rules due to the ongoing farmer protests. No decision has been reached, but I think we've been flouting it out there. And the Midwest dryness is at a 21-year high prior to planting in the US, which can impact the crop production. And then Africa is to play a huge role in the critical mineral strategy, and this is globally for the critical elements that is required. Finally, China cancels Australia wheat buying amidst what they call as a global surplus, and we think while it would be true, it needs to be seen how much impact this has. The upcoming election reports are UK retail sales month-on front, US federal interest rate, China retail sales year-on-year, and the Germany manufacturing flash. All of these need to be watched. Now we talk about risk management, and this is mainly, as we say, the session is about protecting your margins. And this is mainly about figuring out how you look at them. You look at the market movement and look at it in terms of a proactive manner, but do you work on it on a reactive manner? Typically, trade would say we need to have a balanced approach, but I beg to differ. You can't have a balanced approach in terms of risk management if you don't know what the risk is going to be. What you do is, in this case, we're going to assume for different kinds of scenario, different kind of plannings, and we're going to evaluate this in the form of a bullish market, let's say. So on a bullish market basis, the way you manage your risk is by looking at the volatility and being reactive to it. This is not a proactive measure. And typically, what are you trying to protect in a bullish market? Well, of course, you don't want to be caught short. That's number one. And number two is you'd like to protect your profits, which means you've taken a call and the call is going in your direction, which means you are long the product and the market is going up in a bullish scenario. Typically, what we would suggest is to start locking out or averaging out sales prices, and that would sort of give you an idea or a target idea where and how much profitability you earn. And that's the primary aspect of risk management. It's not about maximizing your returns, but minimizing the possibility of you making a loss. And that's the difference. So how do we do that, and how do we know at what point it becomes riskier and riskier? And that's primarily a function of market anticipation. And if we look at the market, which means the surveys that the market does, and we do our own survey and figure out that there is a difference between the market's expectation and our expectation, depending upon which side you have more confidence on, typically you would play to their side. Most traders, merchants would typically take their own views and basis that for trades. So yeah, that's how sort of market is being looked at. Then finally, we'll look at what is going to happen next week. What are we looking at? And we of course going to look at controversy. This is a very interesting topic that we're going to pick up next week. We're going to still talk more about risk management, and we look at it from a bearish point of view. And then, of course, I look at tradecraft, and let's trade from more. So I hope you enjoyed this session. Once again, we're coming from all of these countries. Right now, this episode comes to you from Spain. And I wish that over this few hours and months that we are starting to spend together, you've been able to get something out of this, and it has added some value. So finally, the next episode comes out on the 23rd of March 2024, and I hope once again that you'll be able to tune in and enjoy yourself. So thanks again from the Trade Stylist.